Hey, hey, hey. Welcome back to episode 116 of the podcast. Does not seem like it has been that long, but here we are, over 100 episodes, over 10,000 downloads. So thank you for listening. Thank you for watching on YouTube. We are very grateful for you and happy that you're here. So let's dive back in to Warehouse of Wealth, the book that was written by R. Nelson Nash, Building Your Warehouse of Wealth. This book, as I dive into it, it just ignites that fire in me again and that passion. It reminds me of why, when we started out as clients, why this concept resonated with us so much and how much hope and peace it gave us. And so let's dive into chapter 2 and go over some points that I underlined and things that stood out to me. So chapter 2, it's titled Looking at a Life Insurance Policy Over a Long Period of Time. So this is interesting, and I think it goes hand in hand with the world that we live in today of instant gratification. We want what we want and we want it now. We don't want to wait. We're experiencing this in our household right now, where our daughter has saved up some money and ordered something off of Amazon, and the shipping is delayed. She's very impatient. She's very upset because it was supposed to be here 2 days ago, and now it's not going to be here till next week. And so she's looking for that instant gratification, that satisfaction that this item that she's been looking forward to getting is going to give her, and having to wait a little bit longer is causing her some distress. This topic, I think, really falls into line with the world we live in today. And so the very first line of this chapter is, how you think is everything. Most people don't think long range. If you have met with us, then you know. And if you're going to meet with us in the future, you'll see that we do look long range at these policies. We do talk about a capitalization phase, just like Nelson taught us. Give this policy the time to do what it's intended to do, and you will reap a good harvest, per se. Nelson was a forester for 10 years, so he was accustomed to thinking long-term, looking at a plot of land and being able to envision what that plot of land and the timber is going to look like in 10 years, 15 years, 20 years. We should be looking at our life insurance policies the same way, not looking at them and focusing on what is it doing for me right now? What is it going to do for you in the long run? If we look 15, 20 years into the future, what is it going to do for us? Nelson talks about, in the beginning, his brother was a life insurance advisor, and he purchased a policy from him. And he's going to tell us about that policy in chapter 2. So he talks about the policies are engineered to get better every day, as long as a policy is enforced. So every single day of our life, until the day we die, these policies are engineered to get better. The earlier that we start, the longer the policy continues, the better the policy gets. So remember that. Don't forget that. He talks about how he tends to think about things over a much longer period of time, even like up to 70 years. He lived by plan as if you're going to live forever, but live as if you're going to die today. And he thought that sounded like a pretty good idea. So he talks about, he bought this policy that he gives us an example. If you don't have this book, get in touch with us and we can get it into your hands. He bought this policy in 1959. At the time that he wrote this book, the policy was 52 years old. And he gives us a bar graph that represents the performance of the policy. He talks about the dividends. And the dividend 52 years later was 10 times the premium that he was paying. And I won't give you all the details because otherwise I might as well just read you the whole chapter. So 52 years in, the dividend is 10 times the premium that he was paying. But he talks about how in the beginning, he looked at the policy the way most everyone looks at life insurance. And we talk about this often, where we're looking at life insurance as a society. We tend to look at it as an expense. And he said, I was looking at the policy the way most everyone looks at life insurance. You want to pay as little premium as possible and get as much death benefit for that little outlay. Therefore, a lot of people use the increasing dividends to reduce the premium each year. And that's the way I thought. That's what he said. After living with this limited understanding of the dynamics of dividend-paying whole life insurance for 15 years. So for 15 years, he used his dividend to reduce the premium on that policy. It finally dawned on me that I should be using the annual dividend to buy paid up additional insurance. And that's when he changed his dividend. So if you're unfamiliar, additional paid up insurance is bought with the dividends that are issued to your policy. So your policy is getting better every year. Death benefits growing when there's a dividend issued. It's also increasing your cash value that you have access to while you're alive. He talks a little bit about inflation here, but I'll get to the best part. He talks about how he took out a policy loan because a business opportunity came up. And when we have access to a pool of accessible money, opportunities find us. We're able to think more openly. We're able to say, hey, maybe I could take advantage of that opportunity instead of living and feeling limited. And so he gets into this where he's talking about how he was approached and had an opportunity to purchase a piece of land. And so he says, this is what building your warehouse of wealth is all about. You have almost immediate access to money to take advantage to opportunities that will surely appear. In fact, if you have a readily available pool of cash, opportunities will track you down. And then there's a quote here by Bill Linderman. Does having money safe and available when you need it take away any of your options? Out in the big wide world, there are those who say, but those dividends are not guaranteed. Let's look at the facts. Once per year, the directors of the insurance company meet and declare what the dividend scale for the next year will be. This is allocated to all policies on an equitable basis. It is guaranteed for the next year. So let that sink in. When they meet and they decide their dividend scale for the year, it's guaranteed for that whole year. Your stock is not. The money that we put into the stock markets is not guaranteed. When that dividend scale is locked in for that whole upcoming year, it cannot go backward like your stocks. The only dividends that are not guaranteed are those in the future beyond that point. So every single year when they set that dividend scale, it's guaranteed for that next year. And then regardless of your health, every year that dividend can purchase paid up additional insurance. So you're adding to that permanent death benefit that you started out with. You have an ever compounding increase in cash value in that policy. So this little book, I can't wait to get all the way through it because it just seems to light that fire in me again. He also addresses how in the world we have this ongoing, unbelievable amount of debt. And he talks about interest rates and do we think they'll go up? Do we think they'll go down? And how so many people are getting up to their ears in debt and basically the bank owns them. And he talks about his brother passed away at age 52, I believe. He talks about how he put some money into the market as well. So he had this policy and he had money into the market. And the fellow who was helping him with the money in the market said that in X amount of years, he would have $10,000. So he would put in $600 per year in the market. It's called an accumulation plan. He put $600 a year and in time it'll become $10,000. At that time, we can put it into one of our mutual funds and you'll be set for life. And so Nelson took that opportunity. And then he talks about he was paying $600 into the market or this accumulation plan, and he was paying $388 to his policy. So 10% of his income at that time was going into the policy and the market. And he said his brother knew about the $600 going into the market, but what if he had suggested that he pay the entire $1,000 into the policy? His dividend check that he was now receiving at the time of this writing would have been over $10,000 per year if he had put the full $1,000 into the policy. And so he says, why didn't my brother do that? Why didn't he teach me to pay more in life insurance so that I could take over the debt on some equipment that I had? He's like, he should have taught me to pay more into the policies so that I could be totally self-sufficient. He said I could have been making what the finance company was making off of me for the balance of my life. Once a person gets past that point of financing one item in his scenario, he can accelerate the process very quickly. So he's speaking of the capitalization phase here. If we can be patient and diligent with funding our policy and building that pool of accessible funds, then we can become totally self-sufficient. In about 15 years, a business person can be totally self-sufficient. I know one case where a business owner got rid of the banks in only 3.5 years, and the amount of the payoff was over $500,000. So I don't know who he's speaking to, and he just says, why didn't my brother teach these things? It's because he didn't know. Why didn't he know? Because the life insurance company didn't teach him what he could do and what the possibilities were with these policies. And it's no fault of their own. It's just all how they were taught. Even when Winnie and I both took our life insurance course, they didn't teach us about this. We learned all of what we know about infinite banking from the Nash Institute. So all the qualities of dividend-paying whole life insurance that infinite banking concept teaches have been there for 200 years. 200 years, guys. He said his brother died on the first day of January 1981 at the age of 52. I'm 81 at the point in this time. So in the not too distant future, I'll be reunited with him in the hereafter. This earthly existence is simply training camp for the eternal. And he says that when he gets to the other side, he's going to say, why didn't you sell me much more life insurance than you did? And so he goes on to say, a question comes to mind. Do you think Dave Ramsey or Susie Orman have a clue about this type of dividend-paying whole life insurance? And this is a quote right from page 26 of Building Your Warehouse of Wealth. I don't think so, but they are making the big bucks on TV and otherwise bad-mouthing whole life insurance. So if you have looked into infinite banking, farming without the bank, and you want a little bit more proof that this works, I highly recommend Building Your Warehouse of Wealth. It sparks a fire under you. It reiterates and speaks to what has been taught and what is possible with these policies. If you have a policy and you need to reconnect with myself or with Winnie and get that fire lit again and see how you can best treat that policy to propel that growth and to achieve those goals you have, reach out to us, wecare@rancherway.com. Send us an email there, questions, comments, feedback, and we will be in touch with you. If you are new here, thank you for being here. You know where to find us, guys. You can watch us on YouTube. You can listen on Apple, Spotify, iHeartRadio. Please head over and give us a 5-star review. We would really appreciate that. If you don't have your book yet, what are you waiting on? rancherway.com. You can purchase the paperback and the audio version of Farming Without the Bank. That is where your journey starts. That's where your education begins, where you begin to take the next step to creating that solid financial foundation, generational wealth, keeping that farm or that ranch in your family, and getting the banks to Plan B. Thank you very much for being here. We'll see you next week.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.